So this is a short video about price versus value. And since we're going through coronavirus epidemic, I thought I would choose an example that's very familiar to us all. Think about a hand sanitizer and think about the value of it. And I've learned through this epidemic that you could actually make hand sanitizers at home. So the value of it, I figured out, is a few dollars. But especially at the beginning of the epidemic, the price of the hand sanitizer was so high that I have heard people, paying over $100 for a small bottle. So the price can be quite different than a value. So what is the value of a company? So I pulled up on Yahoo Finance a company that's familiar to us all, Apple, the iPhones, iPads, and Apples and Macintosh and all of that. So this company right now has a stock price of $373, which means that you're buying a single share and you're becoming a shareholder, a partner, a stockholder to this company. And within the past 12 months, within the past trailing 12 months, Apple has paid or has earned $12.73 for each of its shareholders. So if you owned Apple within the past 12 months and whatever price you paid for this share of partnership, Apple actually made you $12.73. You may not actually receive it in cash, but they generate an additional value as an income for each share that's equal to $12.73. So what you paid for this, or when you paid the $373, you become a partner, a shareholder, and you're hoping to receive an earnings and income per share of a similar amount. So that's the value that Apple generates for you. And any other company is very similar to you. I mean, you may have different expectations, you may have different preferences, but the bottom line is you're investing X amount of dollars and you're hoping to make some money with it. You have alternatives. You could open up a checking account, a savings account, and earn pennies. You could have a certificate of deposit, earn, well, a little more pennies. And then, you could buy a bond, U.S. Treasuries, municipal bonds, corporate bonds, foreign bonds, Euro bonds, and then you could buy stocks, preferred stocks, and all of that. And every one of these would have a different payment or different value generating promise for you. So the bottom line is you are buying an investment security, and this security will pay you, hopefully, some sort of a return, some sort of an income. So the value is how much of an income do you expect to get? And this is very important because you don't know how much you're going to get. You have expectations as to how much you're going to get. And therefore, you're paying for $12.73 earnings 1 year ahead of time. And right now, people on average believe that paying $373 for Apple is a reasonable price with an expectation of earnings of this or more. And again, obviously you have other choices. You could invest in other companies as well. So within that competitive environment, what we're paying is that expectation of earnings that you hope to get from that company. And if you are going to invest in a company like Apple right now, that's the price. Let's look at another company. So let's say that we're going to look at Exxon, an oil company. And knowing that Exxon is an oil company, and with the COVID-19, the economy is slowing down, so the oil demand is slowing down. So our expectations about the earnings that we're going to get from the company may have obviously changed. But in the last trailing 12 months, this company has paid $2.66 to each share And people on average are now paying $43.55 for that expectation. And that's an average price. Therefore, as people have more expectations, they might actually be willing to pay more. So why does the stock price change all the time? Because people's expectations change. We expect that Exxon is going to make more money, and therefore they're going to give us more money. We expect that the other alternatives are not going to be as well, and therefore this is better off the overall bunch, and therefore we'll pay more. Or just the opposite. We think that oil prices are going to be really bad, and Exxon is not going to make as much money, and therefore we don't want it anymore, and therefore we want to sell it, or we are willing to pay a lot less than $43.55. So stock price changes because people's investors' expectations about this earnings per share and the price ratio changes all the time. And some people have bullish, positive expectations, or bearish, negative expectations. And based on these bullish and bearish expectations, the price will change. And obviously based on their expectation of the future earnings. So does the company value change? Now, when you look at the company, a company like Exxon, they have drilling platforms, they have refineries, they have ways to piping platforms and all of that, and all of this has a value. But that's not the value that we're pricing here per se. Yes, the company has a value based on their infrastructure or based on the assets that they own. Like for instance, in the case of Apple, the company owns over $250 billion in cash. As you buy one share and you become a single shareholder, you become partner to Apple, and therefore you have a single share right ownership of that cash. In the case of Exxon, when you buy one share, you become a single shareholder and therefore one share partner to everything that Exxon owns. But above and beyond that, the value of Exxon is determined by its ability to create income for you or return for your investment. And therefore, does the value change? Yes. The company's ability to create more income changes. Coronavirus impacted economic growth, economic activity, and therefore the demand for oil went down. And therefore, ExxonMobil, whose actually main operations are oil, and oil prices go down, it's just natural to assume that ExxonMobil earnings, and therefore earnings of shareholders, will be affected by this. And therefore, the value generating ability of Exxon will diminish. On the opposite side, we're coming out of coronavirus, and a vaccine is just any day now. And if economic activity recovers, we would expect Exxon to recover. Not necessarily, but at least we would expect it somehow. And if we have that expectation, then earnings per share, we would hope that it would go up, and therefore we would be willing to pay more for that. But then again, price and value are two different things. Sometimes people are willing to pay significant amount of price for the same value or for a value that did not change. And it could be because many different factors. Like for instance, in the case of Tesla, which is an electric car company, beautiful cars, but the company itself is $273 billion of price. But if you were to look at, say, Ford, the market capitalization, meaning the complete, like if you were to pay $27 billion in change, you would buy the entirety of Ford, and that's only $27 billion. So Tesla producing a few 100,000 cars is $278 billion in price. And Ford, that produces over a few million cars, is worth about $27 billion, so 10 times. So compare the value and compare the price. Obviously, in the case of Tesla, the price includes expectations of future growth. And therefore, people are willing to pay significantly more because they believe that they will earn significantly more in the future than what's being reported right here. And notice in the case of Ford, there is no profit. There's actually a loss. So does company value change? Yes, it does. But price changes a lot more frequently because people's opinion about company changes and companies' earnings changes, and people price the companies based on those expectations and based on what's available out there compared to this individual investment opportunity. So this is the price versus value. Thank you.